Hello, I'm Ben Williams, Corporate Account Manager at the Coventry for Intermediaries. Thank you for taking the time to listen into our presentation today. I'm going to be talking you through the mainstream buy-to-let market and what does it look like over sort of the recent years and beyond 2020. And what are the opportunities for intermediaries to ensure that you protect, support and grow your landlord customer base. So I'll talk you through some buy-to-let numbers and give some context to the market and what we're seeing currently with buy-to-let, and then talk about some data that we've got and how resilient we feel the market is and the future potential that it offers. Then I'll move on and talk about some opportunities to be different and to stand out from the competition, and how protecting and developing relationships is clearly key to keeping hold of your landlord customers, and how understanding lenders and lender propositions plays a vital role in that also. So I'll just kind of set the scene by talking through some buy-to-let numbers, just to give the current market some context of what it's looked like over recent times. As you can see on the screen, month by month, these are the number of buy-to-let advances that have been done in the industry, split between purchase and remortgage. Clearly, remortgage is the grey part of the chart there, and purchase is the orange. Just really showing that the market's performed really well over the last couple of years. It's been fairly flat, but no real kind of downturn fall in recent times for the mainstream buy-to-let space. Predominantly remortgages or refinance, as I'm sure you may already be aware. The purchases are approximately 20% of the market and have been consistently about 20% over the last couple of years or so. A slight dip, as you would expect, in kind of Q1, Q2 2020. Due to obviously COVID and all the reasons that we know, but more kind of interestingly, I suppose it has recovered, and actually purchases were up towards the back end of 2020 as well, maybe as part of the stamp duty relief that was offered for landlords, but an uptick in purchase business as well. But clearly the refinance part of the market is the dominant bit. Just some industry numbers as well, just to go on top of that. I mean, I won't talk in too much depth about the IMLA numbers. I understand from a previous presentation that you may very well have had those discussed earlier, but IMLA feel that the market is going to respond quite well after a difficult 2020, up to about 40 billion, maybe 41 billion in 2022. So a modest recovery in terms of what we saw post 2020 and COVID. But remortgaging is expected to be the dominant part of the market still. About 28 billion is around the figure that they're expecting the remortgage space to be for next year and moving forward. We've also got some data from BDRC. BDRC are an independent company that conduct landlord research, and lenders subscribe to this data to give us a flavour of what landlords are thinking and what they're seeing in the market, and maybe what their intentions are moving forward. So I'll just run through those very quickly, just to give you a feel for what we're hearing from landlords in the market. So 60% of landlords, or 6 in 10 landlords, are funding their portfolio through buy-to-let borrowing. I mean, interestingly, with that, obviously 40% of landlords actually hold unencumbered properties as part of their portfolio, which in itself is potentially an opportunity for those landlords looking to grow their portfolio and opportunities to gear up against those unencumbered properties. But about 60% are funding their portfolio through buy-to-let borrowing. And rental yields have remained fairly stable. They're at 5.8% last year, according to their research. That number's been broadly flat for a number of years. It's hovered around the late 5s, early 6s, but demonstrating that the yields that landlords are getting are obviously much higher than they would potentially be getting from lots of other investments, and still very positive for landlord customers. Last year was obviously a very difficult year, we all know that, but actually, according to the research, 88% of landlords still made a profit last year. So, despite the challenges around, payment holidays and potential tenants not being able to pay their rental, etc., actually the vast majority of landlords still turned a profit in 2020. And towards the back end of last year, we actually saw nearly a third of landlords, 32%, reporting an increase in tenant demand, which again, really, really positive for landlords. That's the highest increase in tenant demand for almost 5 years. So again, really, really positive signs for the buy-to-let part of the market. But in terms of sort of refinance, if you like, and that being the dominant part of the buy-to-let space, 20% of landlords told BDRC that they're looking to reduce the size of their portfolio next year. But equally, almost the same number, 16%, actually intended to expand their portfolio. So most landlords, according to the BDRC data, are looking to keep their portfolios broadly the same size, meaning that the refinance and remortgage is predominantly going to be the kind of growth area or the main part of the market again moving forward. For all the landlords that are looking to dispose, as I say, almost the same number again are intending to buy and expand. So don't really see the sort of mass disposal of buy-to-let investments that maybe some are predicted, which is another really good sign for the market. So with refinance potentially dominating the buy-to-let space moving forward, certainly in the short to medium term, these are the projected maturities from lenders over the next 2 years. I mean, just the numbers on the screen there, obviously a month by month over the next sort of 18 months or so. But between April 2021 and March 2022, that 12-month period, there's something in the region of 28 to 30 billion pounds worth of fixed rate maturities rolling off in the next 12-month period. I'm sure most of you are probably aware that we're obviously at the 5-year anniversary of the original stamp duty increase and the big rush of business that we had in 2016. That will play a part. But equally, it's not just down to that. There are just lots of fixed rates rolling off in the next 12 to 18 months, which presents an enormous opportunity for the intermediary market. The orange segments of the data you can see on the screen, that's the broker introduced business at outset versus the blue part, which it clearly was direct to lender. So it's a very, very intermediary dominated part of the mortgage industry, meaning that it's obviously an enormous opportunity for brokers to stay in contact with their customers and make sure that you're keeping hold of that relationship as much as you possibly can, and making the most of those maturity opportunities over the next 18 months or so. So in terms of differentiators, what do we kind of see as a lender, and what are maybe some of the best practices that we see from some successful broker firms in terms of buy-to-let, and what do they do with engagement with customers and making sure that they build on those relationships with their landlords? So customer engagement obviously is critical, not just around as and when products are maturing, getting in contact with customers at that time. That's obviously vital, and having a CRM system that will help you and aid you in doing that is going to be critical to making sure that you keep hold of those maturities and those maturing fixed rates. So if you aren't already doing so, or you haven't already done so, please take some time to understand some of the solutions that are available in the marketplace. There's a huge amount of investment going on in the intermediary world from various different providers to make brokers' lives easier in terms of customer engagement and ongoing support, and not just relying, maybe on diary systems and paper files, etc. We also find that websites are probably or arguably even more vital in terms of providing customers with information, help and support and guidance for landlords, to make sure that you're seen as the expert to them when they're looking for any assistance or any guidance that they need. So what's your website like? How often are you changing it? How often are you updating the information? And what articles are you publishing in terms of maybe some regulation change or economic house price information, legislation changes for landlords, etc.? Keeping your website up to date and making sure that you're the go-to person for them will really, really help you keep hold of that customer relationship. Marketing and social media are playing bigger and bigger parts with customer engagement, as I'm sure you know. Whether you're an appointed representative of a network or directly authorised and you use mortgage clubs, most of those networks and clubs are offering solutions to brokers, a way of marketing toolkits, whether that be newsletters or website sign-off or articles that you can publish. There's lots of information available for you to be able to provide your customers with, again, just to make sure that you're front and centre of mind whenever they're looking to discuss their mortgage needs or discuss their portfolio and their borrowing. Social media obviously is growing at a rapid rate, whether you're using LinkedIn or Twitter or even Facebook and Instagram. Some really, really clever ways to engage with your customer base, not just for new business, but to make sure that you're offering up information and support and again, being in the minds of your customers over the course of their fixed rates rather than potentially just being there for them when they mature. Most of the successful brokers that we speak to also plan in regular reviews with their landlord customers. Most landlords own more than one property, as I'm sure you probably know, whether they have a smaller or larger portfolio. Regular reviews are critical just to make sure that that they're on top of any potential changes in the marketplace, any economic information that you can provide to them that will help them with their planning for their portfolios, or just standard reviews for expiring mortgage products, etc. Planning in those 6 monthly or 12 monthly reviews is critical to making sure that you have a successful relationship with your landlords. And then lender retention was one of the last things. I will come on and talk about this in another slide shortly, but understanding different lender retention strategies really is critical to keeping hold of that expiring, maturing mortgage business. Every lender out there has a different strategy when it comes to retention, whether it be a pricing strategy, different through brokers or direct, or for existing customers versus new customers. And understanding what lenders do with your customers on maturity is vital in making sure that you keep hold of that relationship. So have a think about which lenders you place business with, what do they do with customers when fixed rates mature, and that will really help kind of guide your strategy a little bit in terms of reviews with customers and how often you need to have them. Also, some of the things that have happened in customers' personal lives clearly might be a reason for you to reach out and offer support and guidance as well. Furlough and self-employed are hot topics in the residential world, not directly impacting buy-to-let necessarily, but customers may still have been impacted in their personal lives through the jobs that they do or the businesses that they run, and they are reasons for you to reach out and offer support and guidance to your landlord customers as well. Payment holidays is an interesting one. There will be some of your landlord customers, I'm sure, that took payment holidays in the past 12 months. And just a question to maybe ask yourselves and ask of your landlord customers: did you take a payment holiday? Do you understand what impact that has on your mortgage balance and having to pay that money back, etc.? Are all reasons maybe to think about engaging through marketing and social media to keep those conversations with your customers moving. And with this slide is titled Customer Wishlist. I mean, really, it's about promoting how easy and straightforward some of the buy-to-let solutions are in the market, particularly with it being dominated by refinance. When customers are remortgaging, particularly in the buy-to-let world where they have potentially multiple properties, large portfolios, the easier that you can make it, the more attractive it's likely to be to those customers. One of the things that we see in here regularly is make it as easy for customers to remortgage or refinance as you possibly can. So lenders are enhancing and improving their propositions all the time, changing ICRs, making them more straightforward, different stress rate options for 5-year fixed and for pound remortgage straight lifts. Lenders are changing that all the time, and in fact, actually, since COVID's happened, it's probably the one area of the market that's been arguably the least impacted in terms of lending criteria changes. But customers might not necessarily think that. We all know it in this industry that there are a multitude of options available for customers, but what are customers thinking? Do they think that COVID has impacted the market to the point where it's difficult, it's complicated, and is that going to drive them direct to lenders rather than back to brokers for advice because they might think it's very difficult or too tricky to remortgage? Considering ERC-free mortgages, another great way of engaging with customers, particularly landlords who might be a little bit uncertain about what the property market looks like. Are we going to see a fluctuation or a change in property prices and rentals, etc.? Offering customers that flexibility of a fixed rate with no early repayment is a really, really good way of allowing landlords that flexibility to change their mind or change their portfolio should they wish to do so. Again, no minimum income. Clearly, it's not something that's new in the industry, but again, is it something that customers are aware of? Is it an option that if they've had a change in their employment situation, but they don't need to be in a new role for a length of time or a particular period to be able to change or remortgage their buy-to-let portfolio? All of these solutions are available clearly to customers, and it's just ensuring that those customers are aware that perhaps any changing economic or employment landscape might not necessarily have impacted them in the way that they think it could have. And product transfers are a huge part of the market already, and potentially with the growth in refinance and remortgage that we're likely to see over the next 12 months to 24 months, are likely to play equally as big a part. Lenders are offering brokers so much information with this now to make sure that brokers are in a position to keep hold of that customer relationship as much as they can. You can see some of the things that we do on the screen at the Coventry, signposting customers back to brokers on maturity of products, emailing brokers to make sure they're aware that we have large maturities coming up in a few months' time. Just a couple of ways that we at the Coventry help customers back to brokers to make sure that they're seeking advice, and lots of other guides and tools as well, retention guides, blogs, webinars, podcasts, various options from various lenders with lots of different hints and tips and ways that maybe you can think about changing your planning to make sure you're keeping hold of those relationships as best as you possibly can. So take some time to invest in what lenders are providing you with to keep hold of those relationships as best as you can. So that kind of brings me towards the end of the presentation. Just a reminder for those on the call that maybe don't know, every broker out there in the UK gets 2 business development managers with Coventry and Godiva. You get a telephone-based BDM and a field-based BDM. So please go to our website, check the contact details for your BDMs if you don't know who they are, and they're obviously open to any questions or criteria-based issues that you want to ask them. So thank you for taking the time to listen to the presentation. I am around for a Q&A, so if you haven't done already, please pop your questions in the chat box, and I will be answering your questions shortly. Thank you very much indeed.